Hi everybody, this is Lara with your end of the week video for the gold spot market for the trading week ending Friday 25th of January. For the very short term, I'm expecting maybe a little bit of sideways movement to begin next week, and after a short final upward wave may unfold, and the next target I'm using is at 1314. If price reaches that target and just keeps on rising, or if it gets there and the Elliott wave structure is incomplete, then my last final target for this upward movement to end is at 1338. And so at one of those two targets, possibly quite early next week, but maybe toward the end of next week, I'm expecting an absolutely huge trend change, and then I am expecting a huge cycle degree C wave to begin to make new lows below 1046.27. Elliott wave analysis first, classic analysis last. I've had a review of the remaining Elliott wave counts, and at this stage they don't diverge from this one. I still have a combination wave count which I may again publish in coming weeks, but for now I'm expecting this upward zigzag to end. The zigzag beginning here, 535. This is my preferred wave count. It has a really good fit, it follows a very common pattern, and within it, it's following the most common unfolding of this pattern. This wave count sees a cycle degree B wave as an almost complete, regular contracting triangle. That's a common structure for a B wave. Beginning here, the triangle begins with a zigzag for A, a zigzag for B, a double zigzag for C. Only one of the 5 subwaves of an Elliott wave triangle may subdivide as a more complicated multiple, and that role usually falls to wave C. And so, like I say, this follows a common pattern. A single zigzag for D, and now a single zigzag very, very close to completion for primary wave E. E waves of Elliott wave triangles, of contracting triangles and barrier triangles, usually most commonly end with a reasonably falling short of the AC trend line. So that's what I will be expecting here. Within primary wave E, subdividing 535, intermediate wave C is an extended 5-wave impulse, 1, 2, 3, 4, and the final 5th wave should near completion, or is nearing completion, and I expect it may end next week. Within intermediate C, if minor wave 4 were to be not complete, if it were to continue further sideways, it may not move into wave 1 price territory below 1241.88. Let's take a closer look at the daily chart, where we'll look at all of primary wave E, beginning at the low here, this point here, 5, 3, and an incomplete 5 for intermediate wave C, subdividing 1, 2, 3, 4, and now minor wave 5 to continue. I'm drawing a channel using Elliott's first technique from 1 to 3 with a copy on 2. This contains all of intermediate wave C so far. Minor wave 5 may find resistance about the upper edge. My first target was at 1300, where minor wave 5 was to reach 0.382, the length of minor wave 1. That target was met. The structure, when I look at it at the hourly chart level, looks incomplete, and I'm expecting minor wave 5 to continue higher. So now I'm using the second calculated target. Minor wave 5 will equal 0.618 times the length of minor wave 1 at 1314, and this is an area of strong resistance which has previously provided strong support. There's a very strong zone of resistance and support just ahead. If price keeps on rising up through this target, then the last target will be where minor 5 would reach equality in length with minor 1 at 1338. Within minor wave 5, it's subdividing as an impulse. 1, 2, 3 could actually be over at Friday's high. If that's the case, then 4 may not move into wave 1 price territory below 1286.22. When 4 is complete, I'll be expecting a final short 5th wave up to one of these targets. At the hourly chart level, here's all of minor wave 5 so far. There's a leading contracting diagonal for minute 1, a very deep zigzag for minute 2. Second wave corrections following first wave leading diagonals are commonly very, very deep. So this follows a pretty common pattern. That's what gold tends to do. Minute wave 3 exhibits a reasonable Fibonacci ratio to minute wave 1. Because minute wave 2 is so very deep, the most likely Fibonacci ratio for minute 3 to exhibit would be 2.618, the length of minute wave 1. Minute wave 3 is 2.30 greater than 2.618 times the length of minute wave 1. I'll be looking for minute wave 4 to move slightly lower and sideways when markets open next week, maybe to end within the fourth wave of 1 lesser degree price territory, which is where the 0.236 Fibonacci ratio of minute wave 3 sits. So the target for minute wave 4 for a little bit of a consolidation to begin next week is about 1298. When minute wave 4 is done, then I'll be expecting a final fifth wave up to end this entire structure up to and including cycle degree. And the first target is at the next target is at 1314. Minute wave 4 may not move into minute wave 1 price territory below 1286.22. At the weekly chart level, this is the other remaining Elliott wave count that has a pretty good look overall. This expects that cycle wave B is an incomplete double zigzag. It could also be a double combination, but a double zigzag here looks more likely. The first zigzag in the double could be a complete zigzag labelled primary W. The double could be joined by an incomplete correction in the opposite direction labelled primary X. And when that's complete, a second zigzag for primary Y. If this is a double zigzag, would be expected to move substantially above the end of primary W, because the purpose of a second zigzag in a double is to deepen the correction when the first zigzag does not move price deep enough. I expect this may more likely be a double zigzag than a double combination, although they're both labelled in the same way, because at its end, primary wave X would be relatively shallow in relation to primary wave W. X waves within double zigzags are usually shallow, so that the whole thing has a strong slope. X waves within combinations are usually much deeper than this one would be, because combinations belong to a different family of corrective structures. They belong to the sideways consolidating corrective family. To achieve that big sideways look, X waves and combinations are usually quite deep. But however, this does not follow as common a pattern as the first wave count, and it's for that reason it's presented second. This wave count expects that primary wave X is unfolding as a triangle. X waves within both combinations and double zigzags are almost always zigzags. They can be any corrective structure, but they are almost always zigzags, so this doesn't follow the most common pattern. Within the zigzag for primary X, there's a single zigzag for intermediate A, a double zigzag for intermediate B. This is not the most common triangle subwave to subdivide as a multiple. B waves sometimes can do this, but it's more commonly the C wave, and so again, this does not follow a most common pattern. There's a single zigzag complete down for C, and this wave count's now expecting a single zigzag to complete up for intermediate wave D. If primary wave X is a regular contracting triangle, which looks most likely, then intermediate D may not move beyond the end of B above 1365.68. But primary X could also be a regular barrier triangle, where the BD trend line would remain essentially flat, and so intermediate D for a barrier triangle should end about the same level as B at 1365.68. As long as the BD trend line remains essentially flat to the eye, a triangle for primary X would remain valid. In practice, that involves a little bit of an area of subjectivity, and D can move slightly beyond the end of B to make a slight new high above this point, and this wave count would remain valid. That's the only Elliott wave rule which allows any area of subjectivity. When D is complete, then primary wave E may not move beyond the end of C below this point, not even a tiny amount, at any time frame. That rule is absolutely black and white. When the triangle would be complete, this wave count would expect a huge upward breakout. At the weekly chart level, let's take a look at what the weekly candlestick is closed like. It's a fairly strong bullish candlestick. Volume doesn't support upward movement within the week, but we really do need to look inside the week to see what was happening on that strong upward day. On-balance volume remains constrained, but these trend lines for on-balance volume here don't have good technical significance. They have too strong a slope, and the lower one has only been tested twice. Well, actually, sorry, it's been tested. It's got 3 anchor points. It still has too strong a slope to have any reasonable technical significance. But if we get a breakout beyond these lines, it will offer a weak signal either way. ADX told us that the prior downward trend had reached very extreme. It's now declining, telling us the previous downward trend is likely over, and now with the cross of the positive DX line above the negative, it's telling us at this time frame that there may have been a trend change to up. but ADX is a lagging indicator, and within this upward trend, which is obviously an upward trend with a series of higher highs and higher lows, there's these multi-week consolidations or pullbacks, which is delaying ADX from catching up with price. ATR has been declining for years now. This is absolutely typical of a huge B wave, and this offers some reasonable support to the Elliott wave count at the weekly chart level, for both of them actually. RSI is in neutral territory after reaching oversold for the previous downward trend. The neutral territory allows for further upward movement, but there is really strong resistance here, about 1300 to 1310. Previously, it was strong support, tested for resistance after a downward breakout here, moving down and away, coming back up now to test resistance at price support. If price can break above strong resistance here, then the next zone of resistance is not that far above. It's at 1365 to 1375. And stochastics is overbought. Let's have a look at the daily chart level. There's a flag pattern here. The best flags and pennants, which are both continuation patterns, complete within 15 sessions. And this one, not including the breakout day, has lasted 14 sessions, and so this is a reasonable or a reasonably reliable continuation pattern. Upward movement for Friday gives a strong bullish candlestick. Upward movement has support from volume. The close above the upper edge of the flag pattern is a classic upward breakout. It has the required support from volume, and so now I'm taking the flagpole from this low to this high, and I'm calculating a target from the breakout point here at 1359. So that's a lot more optimistic than my Elliott wave targets. I actually have more confidence in the Elliott wave targets than I do in the target from the flag pattern. But this offers support to the idea that there's going to be more upward movement. That's exactly what you'd expect after an upward breakout from a flag or a pennant. On balance volume, however, is at resistance, and so for this reason I'm expecting markets to begin with a little bit of a sideways movement next week before on balance volume again has a little bit of room to rise. If this resistance line holds here, it may halt the rise in price, at least for the short term or possibly just temporarily. If on balance volume moves up above this, however, though, that would be a bullish signal. That makes no comment, however, on how far price will continue to go up or for how long. It just is a bullish signal. RSI is in neutral territory. There is plenty of room for price to rise or fall. ADX has been declining, telling us the previous upward trend is likely now over. ATR shows some increase, however, for Friday's upward breakout. That adds some support to the idea, or at least for the short term, for a bullish outlook. Stochastics is in neutral territory. Bollinger Bands contracted as price moves sideways. They may now again expand as the upward trend continues. That's all from me with your gold analysis this week, and I hope that all of our members are having a most awesome weekend.